All right, back with another chart study. Today was a good day as far as how the market moved and how everything played out. Some nice setups. So to start out, I was looking at the S&P 500. You can see these straight edge relative equal lows, and it's not just two lows. It's got multiple touches, three or four, depending on how you look at it. Um, and those don't last long in the market because a lot of retail traders have their stop losses below these, thinking that they're support or resistance. So they're good draws on liquidity. Right here we have the previous daily high. You can see it on the daily chart. So MO stands for midnight open. Price trades a little bit down. Trades straight up, takes out the previous daily high. It then pushes down, breaking structure. This low trades below this low. It breaks structure, leaves a fair value gap. That is a classic setup. You could have taken a short here and targeted the relative equal lows. Price, of course, trade a little bit further, but just looking for the low hanging fruit. This right here would have been a great target. 8:30 price, just trades down. 9:30 reverses back up and didn't really do a whole lot for the rest of the day. One of the things I do want to mention that you could have used for extra confluence for a bearish move. Normally, NASDAQ and S&P kind of move together. So we'll flip to NASDAQ really quick. So as you can see on NASDAQ, there was a daily fair value gap and price traded into that daily fair value gap. So that just gives you extra confluence to frame a bearish bias. So that just helps out with the S&P bias being bearish as well. And just gives you extra confluence on this short. So there wasn't really much left that I saw on S&P, but there was another setup that I marked up on the NASDAQ. So as I said before, price traded into this daily fair value gap, took out this high right here, and traded down very sharply. And as you can see, price traded relative equal lows down here. Now, these are like higher time frame relative equal lows, so to me they're a really good target, especially when you have price giving you other signs that it wants to move down, which I'll get to in a little bit. So price bounces off of this level, creating these relative equal lows to be taken out at a later time. It trades up, two swings, and then it pushes down, breaking structure, and that generates essentially a bearish bias because we have a really good draw on liquidity down here with these relative equal lows, and then price broke structure to the downside, also adding to the bearish bias. And if we're bearish, then up close candles should not be violated. So this acts as real resistance, and it's a good area to frame a trade around. So we'll hop down into the 3-minute, and I'll put the 15-minute on the right side. So on the 3-minute, you can see this area right here is the level on the 15-minute chart, the up close candle. That should not be violated if we're framing a trade around a bearish bias. And as you can see, this swing doesn't break it. This swing gets close but doesn't break it. And there's this swing right here is lower than this swing, and this swing to the right side is lower than this swing. So this forms an intermediate term high, which is a high that should not be violated. And as you can see, it doesn't get violated. Price just continues to trade lower, and it pushes down. Strong bearish candle leaves a fair value gap, and this would have been a good shorting opportunity to target these relative equal lows, and it played out. So those are the two setups I have marked up for this chart study, and that's all I got for this one.